fundsupermart.com.
Hello everyone. With us today is David, the head of commodities at Threadneedle, and he is going to give us an update on the commodities market. Hello David, what is your outlook for commodities in the next 12 months?
Over the next 12 months, we're bullish on commodity prices, and this comes across a number of sectors. Our favorite sector in commodities is crude oil and the energy complex. And the reason for this is not only because of geopolitical concerns, but also because we're seeing a significant uptick in U.S. economic growth. We think this is going to be supportive of prices, particularly in this, and that will be led by mostly distillates as industrial capacity, industrial production in the U.S. continues to strengthen. Looking at other commodities, I like precious metals quite a lot and think that with zero interest rates across most of the developed countries that this will be supportive for gold in particular. We expect to see gold push through 2,000 this year. We're more sanguine on the price of base metals at the moment, particularly in the first half of 2012. I think if we see an uptick there, we can become more bullish. But for the time being, we would expect the industrial growth in Europe to be more moderated, and this will keep base metals largely in check for the next few months.
Why should investors invest in a commodities fund under such market condition?
Well, I think investing in commodities provides something of a hedge against a significant increase in inflation, and it's a way of participating in the secular growth in demand for natural resources. You know, we're in a limited resource world, and so by investing in commodities, that provides investors the upside in prices of the commodities. And it's sensible to be invested across a diversified portfolio of commodities rather than just a single commodity because of the variability and the higher level of volatility in single commodities.
Seeing the surge of spot gold price in the past months, are you positive on the gold price going forward?
Yes, we're positive on gold and to some extent positive on the silver price as well because of the range of new industrial uses for silver. But primarily, I think gold we would expect to see it touch 2,000 this year, and possibly try to trade significantly higher. Zero interest rates in Western economies, as well as central bank buying of gold, as well as physical uptake by individual investors and high net worths, as well as pools of capital that are buying gold, are all supportive of the price.
What are the key risks of investing in commodities fund in 2012?
Well, I think if there's risk in investing in anything in 2012, so with respect to commodities, I think that there's an element of safe haven in commodities as well because they're hard assets. And we're in a world where central banks are experimenting to some extent with monetary and fiscal policy. So there's something reassuring about holding hard assets as part of your portfolio. And increasingly, I find myself talking to investors who are holding 30, possibly 40% in hard assets, and a diversified commodity fund makes up a significant portion of that.